was it that you saw, that you knew that we had to start kind of incorporating ESG factors into investing?
It was clear to me from early on that there was materiality to environmental, social, and governance factors, and that as I looked at those factors in looking at companies in addition to financial, that I was finding stronger management teams and stronger performance.
Really?
And so I was, and ended up finding a whole bunch of early companies that were adopting operating philosophies that were incorporating these.
Because it's interesting, I think about the early days of, ESG investing, if you will, that I do feel like there wasn't always the performance, but you're saying you did notice a correlation.
The performance was there, but you had to also look for financial performance, right? And so the mistake I think you saw in the earliest iteration of looking at these factors were people saying, I'm going to invest in this company because it has strong environmental, social, and governance, but it didn't have the strongest financial model.
It felt good.
It had to be that all of that was there. And so you didn't just buy the company because, boy, seventh generation looks great, it has great environmental, social governance. It had to have a financial model behind it. And so you had to look through and say, here are the names I'm going to own.
Right.
Starbucks, Whole Foods. Here are the names I'm not going to own.
Right.
Right? And then here are the names that are more going to be a stock I can own during certain periods, Ben & Jerry's. But I'm not going to own all of the good ESG stories all the time.
Right.
Right. That was the mistake I think that was made by early managers who were fund managers adopting environmental, social, and governance as factors.
Do you feel like the definition, I was talking about this with our last guest, Natasha Lamb, in terms of how you define ESG, is it getting cleaner and more, kind of standards?
I would say it's becoming more of a broad-based recognition of the materiality that environmental, social, and environmental, social, and governance data can be used, incorporated into an investment process. I don't think that we are to a point where where the data is good enough, but we are seeing steady improvement. And we've gotten to where there are multiple data sets of this that are moving towards standardization. And of course, there's a move with SASB towards standardization.
I want to ask you about a company like PG&E. So here they are, stock's down about 24%. We've seen some hedge funds buying into it. That kind of makes sense. What's your take on a company like this in terms of the climate change and the risk that utilities face as a result? I mean, are they overvalued because of that?
Well, if we want to see the future of fossil fuel electricity generation, we need to look to Europe, which is ahead of us in adopting renewables. And we can look to what happened in Germany, where were not for a government bailout, they would have mostly gone bankrupt. And I would say that most of the utilities in the U.S. have failed to acknowledge what's happening with the change of the importance of the carbon footprint of their companies, and are therefore not adopting fast enough a model to invest toward changing the mix of how they generate electricity. And so we are headed for some real problems beyond, PG&E. We're headed to problems with a number of utilities who are spending their money trying to look at, and I'm going to give you a local Eversource, trying to find political support for an $8 billion extension of pipelines here in the Bay State, rather than focusing in on the changes that are happening in our energy supply and how we are going to need to generate electricity.
So, Matt, is the headline more bankruptcies to come in terms of public utilities? No doubt about it.
No doubt about it. It's just a matter of how long.
What about the coal industry? We've done some stories at Bloomberg that they're having trouble finding financing, or when they find financing from banks and investors, it's expensive.
Yeah. Well, that is part of what happens when an industry goes into secular decline. The industries that are in decline are going to face increased costs and ultimately bankruptcy, And so the coal industry, of course, largely in the U.S. has filed for bankruptcy protection. You're not likely to see anything improve, regardless of what's happening with the administration's constant argument that they were victims of a war on coal. There was no war on coal. Better technology, better options were being adopted.
And the marketplace is just adopting.
And the marketplace is reacting.
Well, speaking of marketplaces changing and reacting, Tesla, has certainly upended the automobile industry. You've been pushing for some governance and some sustainability reports at Tesla. Where are we on that? Are we getting progress? And do you feel comfortable with Elon Musk running this company?
No.
Okay.
In a word. But so we indeed were looking for, given the high profile of Tesla, we were looking for them to try to be more of a leader in doing sustainability reporting, and we're not seeing that. So it's been something we've just continued to push them on.
Just very quickly, 10 seconds. In terms of the Green New Deal, are investors starting to adapt in expectation that some of that will be adopted? Just quickly.
I think people should be recognizing that there are a lot of ideas within the Green New Deal that are likely to be, in the long term, adopted, regardless of where they stand now on believing how it would be adopted and where the cost will be, how the cost will be applied and and the true total cost. But I do think there are elements of the New Deal that have to be, if we're going to actually get to the point where we have sustainability in the economy.